The Wall Street ends largely lower. The Nifty ends below that 26,200 mark as heavyweights Reliance and HDFC Bank were the biggest drags. Financials outperformed with the Nifty Bank ending 0.25% higher, led by ICICI Bank and State Bank of India. Pharma and autos bad for the bulls.
Trent shares slide 8% after its third quarter business update disappoints the street. Standalone revenue growth moderates to 16.9%, continuing a downward trend from 19.8% in Q1 and 17.1% in Q2.
IEX ends about 10% higher after the CERC tells the Electricity Appellate Tribunal that it will consult and seek instructions on the withdrawal of the market coupling order. Tribunal says it will close the case on Friday itself if the CERC agrees to withdraw the case. Good evening. You're watching us here on Markets Today. Markets Forward, rather. This is your go-to show where we aim to get you all the key data points to get up for the next trading day while summing up what took place in the markets today as well. I'm Mangala Malu, with me, Vinny Motiwala. Good evening, Vinny. The Nifty continues to consolidate near record highs. Yes, we're about 150 points away from its record high, but it's just about 150 points. Today was the weekly options expiry. Option writers were positioned between 26,150 to 26,200, and that's where the Nifty actually moved. Tested both sides of the extremes and ended right in the middle of that zone. We were down today, but perhaps not out. The Nifty Bank did well, barring Reliance and HDFC Bank. The large parts of the market did relatively okay.
Did relatively okay over there, large part of the market, Mangalam. Good evening to you as well. And absolutely, banks that managed to hold out to gains. We had IT. Pull up the Nifty IT. That also managed to see some bit of a green, right? So no complaining there. The broader end of the market covered up and, came up from the day's lowest point, closing with mild cuts over there of around 0.1%, 0.2% in the trading session. Advance decline ratio, though, largely today ended in the favor of declines versus advances. But that's a roundup of the market. Like Mangala mentioned, it was more in the range that he's talking about, that it ended at just slightly below 26,200 today is what the Nifty ended at. But, well, here's the lineup for y'all of what we have in store for y'all on the show today. We'll start with the top movers and shakers of the day with Vivek and then get you why Trent declined in trade. It was down 8%, so more on that front. And then we'll talk about some of the brokerage calls and arguments that came in around that as well. And market coupling case that was heard by the Appellate Tribunal. We'll get you deep dive into that, as well as last but not the least, which are the key market events to watch out for in tomorrow's trading session. On that note, first up, let's go across for our first segment for today. That is the top movers and shakers of the day. And for that, we have Vivek joining us from the Big Hall. Vivek.
Well, thank you so much for that. Clearly, the stock of the last half hour or so was IEX, sharp mover. But other stocks too made quite a bit of sharp moves today. The entire metal pack continued to remain in focus. Aluminium especially was the theme today. Hindalco as well as Nalco, sharp movers in the session. From the pharma pack, Divi's, Citi today came out as a note. They reiterated Divi's as their top pharma pick, over 4% higher for Divi's. Apollo Hospitals, one of the top movers as far as the F&O space was concerned, today higher by close to 4%. Aether Industries on very good volumes today, one of the top gainers on the NSE 500 index. And MP Photovoltaic, not a name we discuss too often, recent listing. There was an initiating coverage report from Jefferies today highlighting this particular stock has a long growth runway and also stating that it actually has a significant amount of underperformance or undervaluation compared to peers. On the other hand, quite a few laggards as well. Can't look beyond the Trent, that particular name. Growth rates have started moderating. Markets didn't like that, down over 8% today. OMCs, most of the oil marketing companies were under pressure. HPCL, BPCL, ISL, all of them fell in the session today. Swiggy continued to remain one of the top laggards as far as the F&O space is concerned. When you're looking at Wari Energy as well as Premier Energy, both of these names, ever since coming into F&O, have seen significant underperformance. Yesterday was the day of underperformance. Today, the fall further accentuated. And lastly, Cummins, one name from the broad end of the markets from the capital goods space, down over 4% today. And within this particular sector, Cummins, a clear underperformer coming into 2026.
All right, take that point. Cummins down about 4%. Vivek, thanks a lot for that. But it was the shares of Trent that came under pressure today after reported business updates for the third quarter. The company saw a decline in growth trends since the last few quarters. If you look at the stock, it was down nearly 9% today. Lost about 400 rupees in share value after having fallen 40% in all of 2025. Now, here's the biggest reason why the stock was underperforming. If you look at it, the third quarter update told you that the revenues grew 17%. Now, in an otherwise market, the consumption sentiment that we have right now, 17% is actually good, but not for Trent, because Trent's 5-year CAGR has been 38%. At the start of the year, the company said that they will, sustain 25% CAGR on the revenue. None of the first 3 quarters of this year have the company crossed 20% in revenue growth, and as a result of which the street was disappointed. We got a sell call coming in from Citi as well. They've reiterated that the target of 43.50 rupees as well. And even if you look at the valuation picture, while Trent has corrected about 40%, 50% from the peak, at peak it was trading at around 140 times price to earnings. Over the last 5 years, it's never been particularly cheap. The average valuation has been around 95 times itself. And more importantly, right now after this correction, while the stock is trading at 70 times, if you equate it with the growth, then the price earnings to growth ratio is actually unfavorable, because while the price has fallen, growth has fallen even more. At peak, the revenue CAGR was 55%, so the PEG ratio was 2.5 times. Now, after the stock having corrected, the revenue growth is just 18%. And while the PE is 72 times, the PEG ratio, the price earnings growth ratio, is 4 times. So while the stock has seen price correction, multiple correction, actually on the PEG ratio front, it's actually become a lot more expensive. So to that extent, again, same-store sales growth picking up, recovery in sales given the government boost to consumption, some of their newer formats like Star, Bazaar, Utsa and Burnt Toast doing well would be key triggers for the company. While the risks would be lower than expected consumer sentiment, competition coming in from the likes of Ustar, Shein, Intune and OWN, and by design, Trent has no presence in online fashion. Will that impede growth or not is also one of the questions that the street will ask.
Right, Mangalam, that's important in terms of updates that we should watch out for from Trent. But let's also bring on board our experts for today. Jay Bala, CMT at cashthechaos.com, as well as Sudeep Bandyopadhyay, Group Chairman at IndyTrade. Jay, as well as Sudeep, good evening. Thank you so much for joining in, as always. Jay, firstly, just let's take a quick look in terms of the market levels that we should be keeping an eye out on now. Today, like Mangalam was also mentioning, it's in the 26,150 to 26,200 range. From here on, what are we keeping an eye out on in terms of the levels for the Nifty as well as the Nifty Bank?
Yeah, the key level going forward, Vinny, is 25,690. As long as the market can hold above that level, the markets are safe. But, as an early warning signal, Reliance clocking fresh record highs and then came in, and Nifty clocking fresh all-time highs and struggling aren't encouraging signs. So you have to have a very tight stop. The short term could get a little bit negative if markets were to break below 25,690. But the medium term picture remains unchanged. I maintain the 29,000 call I have on the Nifty. So if the market were to break below 25,690, the approach to 29,000 might get delayed by a couple of months. So the short term could get a bit turbulent. But so watch 25,690 as a very important level.
All right, that's about Nifty. But do you have a view on Trent?
Yeah, Trent still hasn't bottomed. I believe a final low below the 2025 low is pending for the stock, somewhere about 3,800 to 3,700. Once that's done, we can look at the turnaround for the stock. But as a general sectoral view, I'm neutral to negative on the FMCG pack. So most of the FMCG names are in a medium-term downtrend. So we'll reassess that when a trend comes below 3,800. The possibility of that stock bottoming around that level is reasonably good. So let's wait and watch for it. But at the moment, do nothing.
Point, Jay. Thank you so much for that. 3,800 is a stronger bottom for Trent than 4,100 or 4,050 where the stock is right now. But the stock of the last hour was definitely IEX, rallied about 12% after the CERC told the Electricity Appellate Tribunal that it will have to consult and seek instructions on the withdrawal of its market coupling order. There you see it. The stock settled about 11% higher. Ashmit joins in to tell us what he's picking up. He was at the court. Ashmit.
Well, bear in mind that one issue that has dominated the conversation in the previous hearing as well as this hearing have been assertions that are being made by the exchanges like the Indian Energy Exchange that this order is tainted. The coupling order is tainted on account of insider trading charges. They've cited SEBI reports to say that, in fact, the very author of the report is somebody who's been mentioned by SEBI to have in fact profited from, to have made illegal gains from through insider trading, through the crash that happened in the share prices of these exchanges. Now, that is something that even the Aptel today dwelled on. The Aptel said that this is something that even was brought to their attention, that there was a very theatrical process involved as far as passing of these regulations are concerned, that Aptel did not understand the reason behind the drama, and that if there is a foul play found, this is something that the Aptel will look at, will take necessary action on. But in response to all of this, we found that today the CERC councils were also present as a part of this hearing. The CERC council, their lawyer, submitting before Aptel that the CERC wanted this entire process to be fair, wanted this process to be transparent, wanted this process to be consultative. And having said that, clarifying before the Aptel that the lawyer will now go back to the commission to seek clarity from the members whether there can be a withdrawal altogether of the coupling order of 2024. This, in fact, is something that was acknowledged by the exchanges. The lawyers for the exchanges said that if that were to happen, then the entire process then just gets resolved. There is no cause for concern. Even, in fact, Aptel taking note of that and saying that if this clarity comes by Friday, which is later this week, if CERC says they're withdrawing this order, then this entire case will not survive. It'll be over in 5 minutes. So clearly all eyes now on the CERC and their decision on whether they choose to withdraw the coupling order.
Thanks so much for that, Ashmit. But also, Sudeep, what's your view for IEX and everything in terms of we'll wait out for on Friday's decision as well?
Well, definitely, it's a very positive development from a IEX point of view. The coupling order was very, very damaging from their business growth point of view. I know the stock price, it was around 220 levels, sharp correction it had seen. And, leave aside today's, upside, which they got about 10%. But it was hovering at a level where it was definitely worth buying the stock from a long-term perspective. And I think if this, coupling order is kind of withdrawn and a fresh consultative process is initiated for some kind of market coupling going ahead, that will be an excellent for the exchange as well as all the market participants. The earlier one was brought in very abruptly and which created havoc with the share prices of the exchanges. So I think it's a good development. Let's wait for the final on this matter, hopefully on Friday.
All right. Let's move on. Let's talk about some of the pharmaceutical stocks that were doing well today. Pharma, among the others, were also one of the indices of the day that held out in the green. And in that, Divi's Labs was up nearly 4.5%. Citi maintained its buy rating, raised the stock's target price by nearly 43%. What are the contents of that report, the reasons behind this upward revision? Ekta joins us for more. Ekta.
Well, yes, Citi has a buy with a target price of around 9,140 rupees on Divi's Labs. They think 2026 can be an inflection year for Divi's. The company has a strong pipeline of catalysts over the next 12 months, notably GLP-1 as well as contrast media. Now, various custom synthesis products are also maturing, which may be commercialized in the near term. The generic segment too is expected to witness a recovery in 2026. The quarterly numbers may experience volatility according to them and present forecasting challenges, but the medium to long-term story remains intact. They believe that Divi's revenue and EBITDA can expand by 3 times to 4 times over FY25 to 30, and FY27, FY28 EPS is 10 and 18% respectively ahead of consensus.
Ekta, thank you so much for that. Jay, some fundamental analysts are calling it the bottom for pharma and maybe good times are ahead, valuations are compelling. Divi's Labs has done well over the last few trading sessions. We've seen some recovery, price recovery in pharmaceuticals. Do you have a view on the sector? And if yes, then, what's the best way to play it? Via which stocks?
Yeah, see, I've been bullish on pharma for quite some time now. The stock, the index broke out in July, but it's been struggling to push higher. Yeah, it is not, I would say from a technical perspective, it's reasonably possible that we are getting a breakout in the pharma sector. And I like Divi's as well as Dr. Reddy's from current levels, even Glenmark for that matter. Glenmark is actually more bullish than Dr. Reddy's and Divi's. Dr. Reddy's being at an early stage of the move, potential move, I would say. So I think Dr. Reddy's might be a better play, and Glenmark, because of its leadership, I would rate these two as a higher ranking candidate to play the pharma sector. The pharma sector has been on a breakout, but it's not broken down. It's not broken below supports. It's been on a sideways path since August of last year. So the moment it closes about 23,500, it's likely to surge really higher.
Okay, that's the view on the pharma pack over there. Thanks so much for that, Jay. But let's talk about Bajaj Auto as well. That's in focus, and why we do have a note that's come in here today as well. The stock actually hit a 52-week after that as well, 52-week high after that, and that was MK has upgraded the stock today, and target price has also been raised. Now it's over 11,000 rupees. For more details on this one, Sud is here for that. Sud, over to you.
So Bajaj Auto, since the time it has announced auto sales for the month of December, has been in the focus, and in the last 3 weeks stock has risen as high as 10 to 11%. Now today MK has come out with a note upgrading the stock to buy from add and has increased target price to 11,100 from earlier target of 9,500 per share. That implies upside of 15 to 17%, and the reason there is an upside in the target price because it has increased the EPS estimates for FY27 and 28, that is in the range of 4 to 9%. It believes that Bajaj Auto offers attractive risk reward at the current levels. But what's the reasoning behind the upgrade? First, domestic market share for Bajaj Auto seems to have bottomed out, and in the last 1 to 2 months it has gained the market share, especially in its focus segment of 125cc plus. Second one, export momentum continues. Recently, for third straight month, export sales have been more than 2 lakh units. Next one is electric three-wheeler has been seeing the improvement in the total sales, and also rupee depreciation against dollar is going to aid to the margin. And lastly, there can be an upside from the KTM that MK believes that will also aid to the total growth.
Sudeep, what are your thoughts for Bajaj Auto? Do you think that's the best play that comes in here, or would you be looking at some of the other names?
I do like Bajaj, and I've been liking Bajaj for quite some time. I have been always telling that export is something which differentiates them, and they've been doing pretty well there. The most important thing which have changed, I think, for them is that domestic market as well. I think there they have started gaining traction as far as their chosen segments are concerned, and that's very interesting. EV, they have become the leaders undoubtedly, and they are number one, followed by TVS and others. So I think all this does augur well for Bajaj Auto. Of course, the currency depreciation adds to the bottom line straight away for Bajaj because of the exports. The KTM change of management and complete revamp of the management by Bajaj should going forward help them. So Bajaj definitely are positive. I was a bit disappointed with the Hero MotoCorp performance earlier, but I'm hoping that there will be a turnaround. So I am a little aggressively, I'm hoping that Hero MotoCorp can turn around and betting on Hero MotoCorp going forward.
All right, you're betting on Hero MotoCorp. On that note, what we'll do is we'll thank both Sudeep and Jay for joining in and giving us their views on a whole host of stocks and sectors. Take a short break, come back. On the other side, we'll get you the top corporate voices that joined us on the channel today, the key market events that you need to watch out for Trade Tomorrow.
Welcome back to Markets Forward on CNBC-TV18. Now let's get to the top corporate voices that we had through the day. First up, CSB Bank's MD and CEO spoke to us and says that the bank is not using pricing or loan to value as a lever for growth, adding that average LTV is now below 60%, providing a comfortable cushion. Also, he added that the gold loans are a tactical play, while CSB Bank's strategic focus remains on scaling SME, wholesale and retail segments.
Speaking about banks, we also spoke with the management of J&K Bank. They said that they're likely to deliver around 15% loan growth in FY26, aided by repayments of high-ticket loans in the fourth quarter. They also raised their advances guidance from 12% to 12 to 15%. They added that net interest margins are likely to be around 3.7% and ROA at 1.25%.
Oil India Chairman and Managing Director Ranjit says that it will take some time to kickstart and ramp up production even as the company targets drilling 80 wells in this year. He adds that the production outlook in Venezuela looks promising. Rath says that the company is considering increasing its exposure but remains in a wait-and-watch mode.
Right, that's all the corporate conversation that we had on the channel today. But before we wrap up, let's get you some key market events that you need to keep an eye out on in trade tomorrow. Gaurav Javakar, as always, by the big wall. Gaurav.
Well, as when we look at the key events to watch out for, is first let's talk about US market, and we have got a couple of data points from there. First is that non-farm employment change. That is something that we will be watching out for. Second is that the job opening data. So it is really key thing to watch out, because we have seen in the past many events have happened in the US. So let's see how the data comes out. And third is that the crude oil inventory. Now remember, there is a lot of action happening in Venezuela as well. So it is also something that is important to watch out for. From the Japan market, we are going to get composite PMI index. So that is something, let's watch out for that. From European market, we will get the CPI data. And lastly, from the Indian market, let's not forget about the first advance estimate for GDP of FY26. Remember, our polls suggest that 8.3% GDP, nominal GDP growth is something that we can achieve. So let's see if India can actually achieve GDP growth over 8%, because that will be one of the fastest growing economy again if it reaches over 8%. From the corporate action side, let's not forget about the Sensex Pharma, because board is going to consider and approve fundraising. And let's also not forget that the earnings season have started. So we have got Premier Energy and Infrastructure who will come up with the company earnings for third quarter. So let's see how the numbers come. Lastly, from the global point of view and the macro events which are happening in the geopolitical world, President Trump is going to address the press. So that is something, let's see how he is going to talk about the events which have happened so far. And lastly, House Democrats are likely to convene a special hearing on a 5-year anniversary on the attack on US Capitol. So let's see if at all anything material comes out from these events in the days ahead.
Okay, Gaurav, thank you so much for that. But with that, it's a wrap on this edition of Markets Forward on CNBC TV18. Thank you so much for tuning in. We'll be back with more news and updates on the other side.